Just a couple minutes kind of just going over the audit of the basic financial statements for the village as of May 31st, 2023, okay? And you received the documents in the board packets. What I handed out was an executive summary, okay? And I just thought this might be a little bit easier, just to bullet point a couple highlights from the audit report, just for the board to kind of hear a few just general comments about the financial condition, okay? And as you know, the village continues to be in good financial condition. You know, and overall, the audit went very smoothly, okay? As you know, there's been a transition, and you know, I think we were able to get through the audit, so that's very positive. Can everybody hear me okay? Yes. So I think that's very positive. And we did issue an unqualified opinion, so that's really where you want to be in these financial statements, okay? There's a nice, in this 30 or 60-page document, there's a nice summary of management discussion and analysis. Certainly if you read through that, that really gives you a couple highlights, and just going to highlight a few of those as we go through the executive summary. But I just thought this would be a little easier. We use it for some of our other clients. So if you just want to take a look at page 1, this is just a snapshot. So if you were to take a picture as of May 31st, so this is of the executive summary as it's handed out. You know, if you were to take a picture at May 31st, here's your financial position of the general fund. Just a couple items to note: your total assets, top half of the page, $4.8 million. In the middle half of the page, your liabilities, okay, a little over $700,000. And then the bottom half, your equities, okay, what you own, your fund balances, if you will, so a little over $3 million in your total fund balances. And again, we gave you a 2-year look just to kind of highlight a couple of the unique things that happen from one year to the next. And if you look at that receivable, you see there's a big jump in that receivable balance. What that is this: the village had to implement this new accounting standard for leases, okay? Where if you have some long-term leases, which you have with some cell towers, okay, we actually determine what that fair market value of that lease is, bring it back to the present value, and then basically, if you look down at the middle half of the page, you have deferred outflow resource. So we put an asset on there, a deferred inflow resource, and then that gets amortized over the life of the bond, okay, or over the life of the lease. So just to understand that it's there, it's some big numbers, but it's really doesn't impact the bottom line at all. It's really for accounting and financial reporting purposes, just so the board's aware, the reader's aware that there's these long-term lease revenues that you have coming in, okay, or to the village. So that's just one thing to note. A couple of the other items just to be aware of on here, you see the due from other governments, that's the sales tax. Kind of interesting, although sales tax overall was up this year, the last quarter, believe it or not, was down slightly, because if you recall, the county adjusted their sales tax relating to clothing, okay? And that did impact that last quarter relating to sales tax collected, so just to be aware of that. But overall, for the year, it was up. But the other item to note is, again, just down at the bottom half of the page, your fund balances and reserves, okay? And again, you do have some small capital reserves that are out there. That's very positive. Those capital reserves are there to really help control some of those large, challenging items, the different types of reserves that you have. I know there's been some discussion about looking at some equipment type reserves, right, for some purchases of vehicles and things like that. And again, the other thing we've talked about with the finance office is talking about a fund balance plan, right? Maybe when you look at where you're at, developing a fund balance plan that talks about kind of a target fund balance, and then looking at processes to allocate dollars into reserves. Okay, so again, something to really look at towards a long-term plan. But overall, you can see you're about $2.7 million in overall undesignated fund balance. So again, you're in very strong financial position. Okay, so that's just the quick snapshot. I won't talk about just the revenues and expense for too much, but again, just to highlight a 2-year comparison on the next page. couple of just bullet points, again, $3.7 million in total revenues, okay? 3.4 million in total expenses. Okay, so again, for the general fund year over year, you can see the revenues expenses. Again, a couple items. You can see that the property taxes there, the non-property tax is 2.2 million. So that's your sales tax, okay, compared to last year, 1.9. So overall, very strong in terms of sales tax. The other area that state and county grants, as you know, we received a READY grant last year relating to some of the programs that you had. So again, seeing those dollars coming in for the different grant programs you have. So again, very positive. On the expense side, again, nothing too unusual except you see in that general government area, you see a spike in the expenditures. Again, part of that READY grant relating to this well decommissioning that the village had to do. So that's where many of those costs ended up being in your operational plan. So although you see that big spike there, it's relating to some of those very specific projects that you have, okay? So again, nothing too unusual. But overall, you see that overall change in net position at the bottom half of the page. Again, that's your overall increase from one year to the next in the general fund. They're about $275,000, okay? So again, you're doing a very good job in the general fund. So the other major fund I wanted to highlight is on the next page, just the sewer fund. And again, this is a little bit unique because this presentation shows the sewer fund like it's operating as a business, okay? And so in this, with the sewer fund, we have to take all of the capital assets and infrastructure items and then all of the corresponding long-term obligations, and they get included in this snapshot. And when you take a look at the bottom half of the page, you see that net position. And although your total net position is 1.1 million, right, about 1.6 million relates to the capital assets, right? Well, then all of a sudden you see this negative $517,000. Well, what does that really mean? Well, remember I talked about those long-term obligations. The two big long-term obligations are your OPEB costs or other post-employment benefits relating to retiree health. Okay, you hire an actuarial, they come in, they do this calculation based on what your contractual obligations are. They say this is what you've committed to your employees when they retire. Okay, and then the other piece of that relates to the pension system. So the New York State pension system, they basically do a calculation and say, here's your share of the deficit. Last year it was a net pension asset. This year was a net pension liability. Okay, so that fluctuates. So you have to record those on your financial statements. And really that pension system you really don't have any control over. So what I did down at the bottom half of the page, if you were to look at this like you were looking at your general fund, you would do some adjustments back and you would see your operating fund balance go from a negative 517,000 to a positive 859,000, okay? And that would represent kind of the way that you budget for transactions, okay? So, and the way you budget for it is, just like with your health insurance, if you have retiree health costs of $100,000, you budget $100,000, you pay $100,000, okay? Same thing with the pensions. The pension cost is $50,000, you budget $50,000, and you pay it, okay? So it's just the difference in how we're reporting these particular transactions. Now, I know I did talk with the finance department about maybe considering changing this presentation going forward, and that would be something that we can certainly talk to the finance department to make it more consistent with the general fund and how you budget. Okay? I think that makes a lot of sense for you folks, okay? Because then it doesn't reflect some of those long-term obligations here. But just I think the reality of it is when you take a look at this full accrual basis or this corporate style where you're including all of those capital assets and long-term debt and bring it back to how you're budgeting, you have a positive 859,000 in equities, okay? So again, on the surface, it looks a little unusual, but that's because of all those long-term obligations relating to health insurance and pension. So just wanted to touch base on that. Other than that, I think the sewer fund is doing fairly well. As you know, you did have a lot of activity in there. And again, Nothing too unusual. One item to note, if you just take a look on the next page, and just the revenues and expenses, again, you did get some grants this year, a little over $700,000. Primarily, those are the drawdowns for the wastewater treatment plant. For those grants, some federal stimulus monies are in there as well, okay? And then you see the transfer, that $333,000, that's that forgiveness of the loan with the general fund, okay? So with the sewer program and the water program, okay? So those are the key items with regard to the sewer fund, all right? And again, this is the revenues and expenses under that corporate format, okay? So you just have to keep that in mind. But again, overall, you're doing fine in that fund, okay? And then just a couple other comments, the other funds, really nothing too unusual here. The Parks and Rec Fund, again, those are primarily dollars that are restricted for your parks programs. As you know, you have an assessment on buildings, new building, so that's where those dollars go, and then they're spent on park improvements going forward. Your Special Grants Fund, if you recall, there was some flow-through money for a EDC grant or a grant, so that's the EDS grant, so those are just those dollars flowing through the village, okay, nothing unusual there. And really just your capital projects fund is kind of the tail end of that, okay? So globally, you know, the village is in very good financial condition, so continue to kind of review and move forward with that. The other piece, do you have any questions just before I talk about this last piece, which is the internal control communication?
Questions?
Okay, so just with any audit, part of that process is to look at the different internal controls, the checks and balances that you have over the different financial cycles, okay? And you had the management letter, and again, just a couple bullet points to kind of review that will enhance the checks and balances that you're currently doing. So again, no material weaknesses or significant deficiencies, a couple procedural items relating to when you're using reserve accounts, also authorization relating to payrolls and payroll transactions, as well as just reviewing your procurement procedures. So again, very minor items, just some enhancements to the procedures that the checks and balances are currently doing. But again, overall, you continue to be in good financial condition. And you know, you're doing an excellent job in terms of your internal controls and checks and balances, and you know, just keep monitoring those different unusual programs. Any questions?
Oh,
I do not.
Good job.
That was easy. Thanks, Tom.
Thanks for the staff.